Inventory auditing is the process of reconciliation of physical inventory with the logical inventory. Primarily, we have two methods. One is periodic inventory audit and the other one is perpetual inventory audit. In this video, we are going to discuss about the periodic inventory audit. Let me tell you a story. In the early 1990s, I was working for an engineering firm where I was part of the production planning and control and inventory management team. Every year, at the end of the financial year, especially, out of this 1,500 employees, some 300 will be given a special task. The factory will be shut down for 2 days, and these 300 members will be given a predetermined form, a pad and a pencil, and they will be asked to do the inventory counting in various static locations across the factory. So basically, they were on a journey to count the inventory under raw materials, work in process and finished goods. So this exercise will be going on full swing for 2 days, and at the end of these 2 days, these 300 members will submit this completed form to me. My job is to consolidate all this inventory, and I have to provide this input to the finance team, and where the CFO is really looking for this information to incorporate this under the balance sheet in the form of raw materials, work in process and finished goods. So now the thing is, like, definitely there are some kind of strong drawbacks of this method. Number one, the thing is, like, the factory is shut down for almost 2 days, and this is a huge loss of production or production capacity. And second, the 300 people whom we sent for inventory counting are no way comparable to specialists who are capable of accurate inventory counting. So there are a lot of errors which you can expect. And the third thing is, the inventory accuracy is restored for 1 day, but it will be gradually deteriorating for the rest of the period. So it means when you use periodic inventory counting, the inventory is restored once in a while, but subsequently it deteriorates continuously. So when we say periodic inventory, it doesn't mean that we will do once in a year. It depends on the company. It may be like monthly, quarterly, half yearly or yearly. And like, what are all the various reasons? Though we say the periodic inventory is kind of like a thing of the past, because today most of the companies are using cycle counting, which is part of the perpetual inventory counting. Though it is thing of the past, the thing is, like, there are various situations that demands periodic inventory counting. Number one, it is a statutory requirement demanded by Companies Law and Income Tax Act. And second, some of the banks may demand this to do the periodic inventory audit just to ascertain the quantum of inventory within the factory when they are using this inventory as a collateral. That is, when the company is using this inventory as a collateral for some of their short-term or working capital loans. And third, whenever a company files for bankruptcy, the bankruptcy law or the court, they may demand a periodic inventory audit to ascertain the kind of like the value of assets within this company in the form of inventory. So we will have a detailed discussion about cycle counting in another session. Thank you.